Hey there, Lincoln here from bullacademy.org. Today I want to walk you through the transaction overview of Lucid Motors CCIV's merger. CCIV is Churchill Capital Corp 4, the SPAC that is going to take Lucid Motors public, and they announced their merger plans this week, and of course the stock went plummeting, which wasn't great, and I covered why in a previous video. It was a little bit of a rant, but if you want to see why the stock plummeted and what all of the chaos is about and everyone's anger and rage is about, then go check out that video because I addressed all the traders out there complaining about being screwed by the suits. But in this video, let's just focus on the transaction overview and what it all means and when Lucid Motors plans to become profitable and cash flow positive. There's over 74 pages in this presentation that Lucid Motors and CCIV put together and released to investors this week, and I summarized key parts of it for our patrons at patreon.bullacademy.org. So if you're interested in getting early access to my research and updates, then join us over at patreon.bullacademy.org to support the channel and help us grow. But in this video, let's just walk through the last 6 pages in this 74-page deck, and I'll explain to you each of the parts, and I'll come back to the rest of the deck later on in future videos. I'll try to break down the deck into parts because it's way too long to go through in one video. That would be extremely tiring for everyone involved, including myself, but it's important for us investors to look at these decks and break them down. Even though they're mostly projections and there aren't too many hard facts in these presentations, they're good to know how the company plans and are thinking about their future. And of course, they use other companies with existing numbers to benchmark themselves against and help us compare them to the competition. So there's definitely value in going through these decks. We're going to start with the transaction overview, the numbers of the deal. But before we get to that, just a quick reminder: if you enjoyed the video, like the video below, subscribe to the channel, hit the notification bell, and comment below what your thoughts are on Lucid Motors and the numbers that the company is presenting here. And of course, join us over at patreon.bullacademy.org to join our Discord channel where we discuss the stocks and SPACs that we're all invested in to help one another build our wealth together. We discuss the stock market every day in real time and share news and rumors to help one another find the best investment ideas early before everyone else has a chance to get in. And of course, you'll have a chance at winning $200 every month just for being a loyal and engaged patron. So if you're interested in all of that, I hope to see you over at patreon.bullacademy.org. Now let's hop in. We're here in the deck. And like I said, there's 60 or 74 pages in this deck. So there's a lot to cover. And again, we're going to cover all of this, most of it at least, the important parts over the coming few days. But again, let's start with page 62, the transaction overview. And this is of Lucid Motors and Churchill Capital's merger. So the company breaks down here, Churchill Capital breaks down what the transaction sources are, what the pro forma ownership will be, and how they plan to use all the funds from this deal. And of course, there's a bunch of fine prints which we have to read because it's very important that we understand. So let's look at the sources, the estimated transaction sources and uses. This has been a great source of confusion among traders who got in at the top of the Forma when the stock price rose to $40 and $50 and $60. And they were upset because they thought that this number was going to be the pro forma value of the company, of the shares outstanding after the deal is complete. That is not the case. No one told them that that will be the case. So there was no reason to believe that. But that's all for another conversation, which I covered in a previous video. And you should go watch that if you haven't yet. But let's read through these sources and then the uses of the sources and then the pro forma ownership and then the transaction highlights, and then we'll get to the fine print. So here it says the estimated transaction sources and uses are CCIV, cash, and trust. This is from the SPAC deal, the SPAC, the Special Purpose Acquisition Company. And this is all the money that the SPAC has raised and put into the trust fund to complete this deal. And this $2 billion is 12.7% of the funding sources of this deal. And then there's the PIPE proceeds, which is the private investment in public equity funds, which were raised at $15 per share, and that comes out to $2.5 billion. So this CCIV SPAC funds and trust were raised at $10 per share during the SPAC's IPO. This PIPE deal was raised at $15 per share. So those who invested in the SPAC at the NAV, the net asset value, at $10 per share, got a 50% return on their investment when this PIPE deal was put together. So the PIPE deal, the PIPE investors actually paid 50% more than the SPAC investors. So that's a 50% premium, which is a good thing for those who invested in the PIPE at $10 per share or 12 or even below 15. So if you got in below $15 per share on this SPAC, CCIV, then you benefited from this PIPE deal. So there's no reason to complain here. And I personally believe that this is a good thing. I mean, I would say objectively, because I don't know how else that would be a bad thing. But anyway, this PIPE deal accounts for 15% of the funds. Next is the existing Lucid shareholders' shares, which were valued at $10 per share, and there were about 1.175 billion shares outstanding from Lucid Motors private investors. So at $10 per share, that turned out to be $11.750 billion. And that's 72%. So this is the pre-money valuation of Lucid Motors. CCIV valued Lucid Motors at $11.75 billion before their investment. So before we get to this side over here, before this deal is put together, CCIV said to Lucid Motors that, hey, we believe that you are valued at $10 per share, so this is your valuation, pre-money. And that's 72% of the sources of this deal. So I hope all that made sense, but if it didn't, it's all right, because these numbers won't really matter too much going forward once this deal is complete, but they will matter. This $11 billion, this $11.75 billion will matter for the entirety of this deck. So it's important to know that this is what the Lucid Motors was valued at before this deal was put together. This is effectively the enterprise value of Lucid Motors. So keep this enterprise value in mind right here, $11.75 billion. It's going to be very important in the rest of this deck. So now let's look at the uses of these sources from this deal. The deal will leave $4.405 billion on the balance sheet as cash. And all this money will be used by Lucid Motors, the merged company, once the deal is complete, to fund its operations to get to its goals and profitability. So the cash going to the balance sheet accounts for 27% of the sources, the funds from this deal. And the existing shareholders accounts for 72%. So they're getting 72% from these sources. And then the fees to complete this merger will account for 1%. And that's about $165 million. So all of that comes out to $16.32 billion. I'm covering these fine prints as I go through, but you should look at the deck because it's good to know. Let's move on to pro forma ownership. Once the deal is completed, this will be the breakdown of ownership of this company. So CCIV Churchill Capital Corp 4 shareholders, as those who invested in the SPAC, will receive 258.1 million shares of the merged company, which is 16.1% of the deal, which is pretty good compared to other SPACs where the SPAC investors own anywhere between 8 and 11%. So again, CCIV shareholders are making out pretty well here, especially compared to the PIPE investors. So the PIPE investors are getting 166.7 million shares of the merged company, which accounts for 10.4% of the merged company. And again, the PIPE investors paid $15 per share for their shares, whereas the SPAC investors paid $10 per share for their shares. And then finally, the Lucid Motors private shares, existing shares, will be rolled over into this deal, which will give them 1.175 billion shares of the merged company, or 73.5%. That's assuming that they roll over all of their shares. And when all is said and done, the pro forma shares outstanding will be about 1,599.7 million shares outstanding. So this is a lot. This is a lot of shares. But again, this company is being valued pretty aggressively. And for good reason, in my opinion. The company has great potential and they're entering the market at a good time because a lot of the electric vehicle infrastructure has already been put down by people like Tesla and Electrify America and ChargePoint and Blank Charge, and all of the rest of the players in this market have done a lot of work to get to this point where EVs can start to really take over and replace the legacy ICE vehicles. So Lucid Motors is being valued, if you take this 1.599 billion shares and multiply that by the price per share in this deal, $15 per share, which is what the last fundraiser from the PIPE investment was at, $15 per share, you will get $24 billion as the pro forma value of the shares, which translates to the market capitalization once this deal is complete. So that means that CCIV has valued Lucid Motors in this combined deal at $24 billion, which means that if you are paying more than $15 per share today, or if you already did that in the past and you paid $60 per share, you're overpaying, according to the CCIV team. But of course, as is normal with the stock market, investors will pay a premium for what they believe the future will be. So if you're paying $30 per share, you might be justified because you might believe that Lucid Motors is going to be worth more than $30 per share within the next 2 to 5 years. And you're willing to pay that premium today to get in early, and hopefully in the future, they will surpass that by magnitudes, right? So let's move on to the transaction highlights. Just to summarize everything here that we already covered, the transaction highlights say that this is a $11.75 billion acquisition value, which is what this is right here, what the company was valued at pre-money by CCIV. CCIV said that Lucid Motors, their existing shares, are worth $11.75 billion, and that's what they're acquiring them at. And this is what was reported by Bloomberg and Reuters before the deal was announced. So they were pretty much spot on. And the source of the cash going to the balance sheet after the deal is complete is about $4.5 billion from Churchill Capital and the PIPE investment. The transaction is expected to close in the second quarter of 2021. So anywhere between April and the end of June is when this deal is going to be complete. Finally, the CCIV ticker will be converted to LCID for Lucid Motors once the deal is complete, once the merger is closed. And that means that for shareholders of CCIV, your shares will automatically roll over to become LCID shares. You want to take any action. I get this question a lot, so there's your answer in advance. If you own CCIV, once the deal is complete, you will be an owner of LCID, Lucid Motors, the merged company. So one important thing, or maybe two important parts of this fine print to realize and go over is that all of this pro forma cash balance assumes no balance sheet cash at closing, but there will be a $600 million bridge financing before this deal is complete in order to help Lucid Motors make it through the merger, because they currently don't have enough money to get to the end of this deal. So those funds will be provided by the PIF, the Public Investment Fund of the Saudi Arabia nation. And the PIF currently owns 85% of existing Lucid shares, so they will own about 62% of the shares of the merged company once this deal is complete, which is a whole lot of shares in a single shareholder's hands. So they will have a lot of power and interest in this merged company. And again, that's the Saudi Arabia Fund, Public Investment Fund. So let's move on to some comparisons between Lucid and their competitors like Tesla, Fisker, NIO, Canoo, and XPeng. So as far as I know, Fisker and Canoo have not produced and sold vehicles yet, but Tesla, NIO, and XPeng have. And of course, NIO and XPeng are Chinese companies, and Tesla is an American company that has expanded to China. So with that said, Lucid Motors, CCIV, are saying that their comparison of their enterprise value, again, that's the $11.75 billion that they're valued at in the enterprise value, over revenue multiple is 5.3x. And the lower this number is for investors, the more attractive an investment it is. So you want this number to be lower. So Lucid Motors is saying, hey, look, our enterprise value is 5.3x at the acquisition of this company at $10 per share, which is what the SPAC investors paid. This deal has an enterprise value over 2022 expected revenue multiple of 5.3x. The company expects to make about $2.2 billion in 2022. So they're saying that our enterprise value of $11.75 billion over this $2.219 billion in expected 2022 revenue is a smaller EV over revenue multiple than the same projections for Tesla, Fisker, NIO, Canoo, and XPeng, with Tesla, of course, the most valuable among this group, and any car company at this point, is a 12.9x multiple for their expected 2022 revenue. And Fisker, who has never produced and sold a car yet, is 10.6x. And NIO, a Chinese company that has risk of being delisted on the US stock market, is trading at 10.3x. And Canoo is at 9.1x, and XPeng is at 6.8x. So some people, especially the Tesla hulks out there, the Tesla bulls who don't believe that anyone else can compete or should be in the market, are upset that Lucid Motors is representing this multiple using their enterprise value and not their pro forma shares outstanding, which is an odd criticism because this specifically speaks to their enterprise value, not their market cap, not their pro forma ownership valuation, but their enterprise value. So there's nothing wrong with this slide. Of course, the only thing that you can really say is that this is based on a projection that we just have to believe at this point, which is the case for any projection. Projections are not facts. They haven't happened yet. That's why they're called projections. So if you're upset about projections, then you're upset about all of these numbers over here too. So anyway, I like this number. And if the company can reach, say, a NIO multiple, or even a Fisker or Canoo or even XPeng multiple of 6.8x, that's pretty good. So if they reach, say, NIO, that's about 2x in the next 2 years. So in 2 years, if they can produce enough vehicles to be valued as much as NIO on the market, then you could see a 2x increase in the value of your shares as a shareholder of the combined company. That's pretty good for 1 year. Of course, I don't think they're going to do that. It might take a little longer, maybe even 2 years from now, maybe even 3 years or 4 years from now until they get to this 10x multiple. But that's a pretty good investment still. Then we go to their 2023 EV over revenue multiple, which again, let me remind you, they expect to make $5.532 billion in 2023 as they expect to sell 49,000 cars in the same time. So they're jumping from 20,000 cars in 2022 to 49,000, which is pretty believable if they can successfully scale from 2022 to 2023 in their productions. And this is about 2.5x increase from 2022 to 2023 in revenues, which is pretty good and pretty believable. I've heard people complain that, oh, it's too much of a jump, but I think that's pretty doable if they can actually produce their cars correctly, manufacture them correctly, which is the hard part. You have to actually manufacture these cars before you can actually sell them. If they can actually manufacture them and then do the marketing and get them sold, then yeah, I think it's possible that they can actually reach this revenue or get close to it. Even if it's 5 billion or 4.5 billion, that's pretty good for a company that's only 2 years on the market. So if we're going from $5.5 billion and we're comparing that to the rest of the market, then Lucid is at 2.1x EV over revenue for 2023. And Tesla is at 10.7x, which I don't like comparing Lucid to Tesla because Tesla's about 10 years ahead at this point since they IPO'd in 2010 and Lucid is IPO in 2021. So Tesla is very far ahead. Lucid can get to that point, but it's going to take lots of work. So let's compare them to younger companies like NIO, XPeng, Canoo, and Fisker. For NIO, again, the Chinese company that could be delisted if tensions rise between the US and the Chinese governments, they're at a 6.5x multiple. XPeng, again, another Chinese company, is at 4.1x. And Canoo and Fisker are at 3.6x and 2x as USA companies. So besides Fisker, Lucid is still below all of the rest. And this is just a graph, and they're showing how Tesla has been valued by the market for their EV over 3-year forward revenues since 2012. So they've been valued around 3x for quite some time, even getting as high as 6x, and then down back to around 3x again, and then under to around 2 or maybe 1.5x in 2019 when people were afraid that they were going to go bankrupt. This is actually when I invested in Tesla right here. Very good time to invest, below $200 per share, and now it's going up. If you invested here, you've made a whole lot of money. So Tesla was valued very low at this point, but then they made it out of that rut and they went back up to around 3x of their 3-year forward revenue projections. And then they just shut up. And this year, they were sitting at a peak of 16.3x, their 3-year forward revenue projections. 16.3x. Lucid is at 2.1x right now. So let's just say Lucid can get even a quarter of what Tesla gets as a premium on their valuation of their 3-year forward revenues. If Lucid's at 2.1x and a quarter of 16 is 4, that's a 2x, right? That's 2x if they can get their cars out and selling. And once they start to do better, maybe they get to a 33% of what Tesla had at their peaks. And with Tesla at 10.7x in January of 2021 or February of 2021, if you have a quarter of that, Lucid is still under what that valuation is. So even if you're at 2.5 at a quarter of this Tesla valuation, and Lucid's at 2.1x, there's still room to grow. But again, Lucid has not produced any vehicles, so once they do produce vehicles, then they will be able to actually garner more premium valuations from the market. But right now, they still have to produce cars. So right now, all we have are projections for the future. And we'll see how it all plays out. So their last word is that this is an attractive entry at less than 2% of Tesla's current valuation. Again, this is all based on the $10 per share valuation. So if you're a CCIV investor who got in at $10 per share, then you paid less than 2% of what Tesla's valued at, which I would argue is pretty good for a company that has great potential and could do similar things as Tesla has been doing over the years. So let's move on. And this is just marketing for investors, saying how the company has a legitimate track record, validated technology, long-term success, and their plans to do high-end products first, followed by progressively attainable vehicles, which will position the brand for long-term success and growth. They have an established in-house manufacturing. This is what I really like. The vertical integration is going to be key for this. Vertical integration is very important in this space. If you can do it all, you can move faster and you can cut costs, and you have control over the customer experience and you design everything. You get to build a product that you want. And they have in-house sales and service network, which means that they are not dealing with dealerships like Tesla. They don't go through dealerships. They sell their cars straight to consumers, direct to consumers, and they handle their service network. And they have an untapped potential in adjacent markets, so additional untapped potential in battery storage solutions and powertrain technology licensing. So they want to be able to sell energy, battery storage, as well as their powertrain technology, so their platform, their skateboard. They want to be able to license that out to other companies to produce their own cars and other vehicles. And they have a robust pipeline of products, which we'll cover later, and favorable market forces, large addressable market with favorable tailwinds because the EV market is only growing from here. Everyone wants to get rid of the ICE vehicles. Every government has plans to outlaw more sales of ICE vehicles. So there's lots of tailwinds here. And of course, like I said before, the infrastructure is being built aggressively. ChargePoint exists, SBE ChargePoint, which has completed their merger. And there's Blink Charging, there's Volta, there's Electrify America, there's EVBox and EVgo in Europe. There's just so many developments in this space that's going to make it much easier for Lucid Motors to succeed than it was for Tesla, because Tesla was the front runner. They were the trailblazer. So they had to make all this work on their own. They had to build their own charging network, which is very expensive. And they have to maintain that capital expenditure going forward. It has benefits, but it also comes at a heavy cost, which Lucid Motors will not have to take on because they already have other ways to provide charging to their customers. And because EVs are getting more popular, they will have an easier time at selling their products. And they have an experienced partner in Churchill Capital. And they say that the transaction with Churchill creates an opportunity to advance and accelerate the immense progress Lucid has made. And they say thank you, but we're not done yet. Just quickly, I want to walk you through the company's path to profitability, which would be EBITDA and free cash flow. And of course, their gross profits. So they're projecting that in 2023, they will have $5.5 billion in revenues, and that will grow by 79.5% in 2024 to $9.93 billion, which is a steep climb, right? This is a very high growth company, and they're going to have to be to compete with the rest of the market. And they also expect a steep climb in 2023 with 149.4% growth in revenues in 2023 over 2022. As I said above, it's a 2.5x increase. which I do believe is possible. But again, these are just projections. They might not happen. They could get close and they could actually miss it completely. But we'll see what happens. This is for us to decide if we believe that the management team is capable enough, has a good track record that can prove that or suggest that they can actually hit these marks, because these are aggressive marks. So they're projecting this insane growth to slow down in 2025 and going forward, because that's when they expect to actually become EBITDA and free cash flow positive. So in 2024, they're expecting to have $592 million in EBITDA, but still a $1.5 billion loss in free cash flow. So they're going to be burning money for quite some time here. So that means that because they have $4.5 billion on hand, if they're burning $2.3, $2.7 billion a year for the first 2 years, they're going to have to raise more money in a secondary offering once this money is coming close to being depleted. So you can expect them to raise money next year. And if they don't, I would be surprised. And before anyone talks about dilution and how it's awful, Tesla has increased their number of shares since 2008 from 33 million outstanding shares to over 1 billion shares today outstanding. So dilution is normal. So if you hear anyone saying, "Oh, it's bad that they're going to have to raise money because they're going to run out of money and they're going to have to issue more shares and that's dilutive," just say, "Hey, look at Tesla. They've increased their outstanding shares 33x since 2008. So that's not all that matters. Why are they fundraising? That's what you should ask. Why do they need more money? Because they have ambitious goals, and if they're showing progress towards those goals, then yeah, we should give them more money to get to that point if you believe in the company's future." So if you hear anyone talking about dilution and how it's awful, do your best to ignore that unless they come to you with data that shows that the company is regressing in their progress towards their goals. So if they're showing that they're not actually moving forward and getting close to profitability, and they're just losing more and more money every year, then yeah, maybe you should consider what that person's telling you. But if they're just saying, "Oh, dilution's bad," then they don't know what they're talking about, so you can just ignore that. In 2023, they expect to lose $3.25 billion in free cash flow. So this is a steep increase from the year prior, and I believe that's because they're also going to be investing heavily in capital expenditures, which we can see here. They're doing a steep increase in their capital expenditures by about $600 million. That's how much more they're going to invest in their growth. So that's going to lead to less free cash flow or more negative free cash flow, which is not a good thing, but it's not necessarily a bad thing because, again, this is a young company. They have to invest in their future. That's the only way they can actually get to being profitable, which they expect to get to by 2025. So by 2025, they expect to have $1.67 billion in EBITDA profits and $321 million in free cash flow. So that's about 4 years after they're going public. It took 9 years for Tesla from its IPO in 2010 to get to an annual free cash flow positive. So if Lucid can do that in 4 years, that's very impressive. And they expect to 5x this cash flow between 2025 and 2026 to $1.5 billion in free cash flow. Of course, this difference means that they're going to have to cut back on investments in their future, which we'll have to decide if that's good or bad once we get closer to that time. But it's going to be a slight decrease from $774 million in capital expenditures to $573 million in capital expenditures between 2025 and 2026. So I like these numbers. They are ambitious, but the company is not just a car company, just like Tesla. They plan to have energy storage. They plan to license out their technology. And of course, they're going to sell more cars in the future. From their luxury, they're going to go down and become more mass market. So these numbers seem to be, to me, attainable, reachable. They might be aggressive, but we'll see as we get closer. Let's see what the first few years are, and then we can reassess whether or not we think that they can get to this. So let's see what happens this year. And then we'll see what happens next year. And we'll see what happens the year after that, and we'll decide every year or every quarter we can decide how we feel about this company as an investment. For me right now, I still like this company. From all I'm seeing here, I like their numbers. I like their plans for actually competing in this market and doing more than just selling cars. Because I wouldn't just invest in a car company. That's not what I do. I like to invest in technology companies. And Lucid Motors is a tech company, a vertically integrated tech company that has multiple businesses that they can offer to customers to grow their revenues and grow their free cash flows. So that's what I'm invested in, not just a car company. I've said this again, invest in pickaxes. And Lucid Motors has leading battery technology and their efficiency is unparalleled. Okay, that's it. That's the transaction overview for the CCIV Churchill Capital Corp 4 and Lucid Motors merger. So I hope that was helpful. I hope that all of those numbers help you understand how this deal is being put together and what it means for you as a shareholder of CCIV and what will happen to your shares once the merger is complete. So again, if you're interested in investing in this company, you can do so by investing in CCIV right now or their warrants, CCIVW. And if you don't know what warrants are or what the risks are, you can learn from our previous videos on warrants, which is the top ranked on Google, and our video on the dangers of SPAC warrants. So if you're interested in all of that, I hope that you check out our videos at bullacademy.org. So as I've alluded to this whole video, I'm invested in this SPAC. I believe in Lucid. So I'm looking forward to seeing them produce their cars in the second half of this year and actually selling some of their cars. And we'll see how many they can sell. Right now, it looks like they have about anywhere between 5,000 and 9,000 reservations for cars. So we'll see if they can actually produce that many cars and if they can actually sell those cars to customers later this year. That's it for this video. If you enjoyed it, like the video below, subscribe to the channel, hit the notification bell, comment your thoughts below on whether or not you're investing or questions that you have for this deal. And of course, if you want to help the channel grow, reach more investors, get more access to me, get direct answers to your investing questions, then join us over at patreon.bullacademy.org. You'll be able to engage on our Discord channel where we share knowledge and discuss the stocks and SPACs that we're all investing in to help one another build our wealth together. We discuss the stock market in real time every day, and that's where we share news, rumors, and investment ideas to help one another make better investment decisions. And that's where I share my early research that I don't share here on YouTube because I can't share everything on YouTube. It takes too much time and too much effort. So I write some reports and essays to share my ideas and early research for our patrons. Thanks to all of that, we were able to get into many deals early before everyone else, like CCIV and SBE. We didn't get burnt on the way up because we got in early. We were able to share diligence and get in before everyone else did. So if you're interested in all of that, I hope to see you over at patreon.bullacademy.org. I'm Lincoln with bullacademy.org. Thank you again and have a great day.